Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of August the 13th, 2018. Now, to get started this week, we are going to again begin where we always do with that very important US dollar index. Now, what we look at here is again a range top coming in around this 95.35 area. Key point that I'll make here when using the VantagePoint software, the forecast higher in the dollar was over a week ago that the dollar was going to push higher. That was followed by the neural index, the predicted medium and long-term difference cross, and of course a break of the 60 level on the predicted RSI. This has led to a bigger move, but I will point out that we've had, in my respectful opinion, an excessive move based around the issues that are going on in Turkey, and of course the Turkish lira giving up 25% of its value against the US dollar, which has fueled this dollar rally right across the board. And I think it may be a little bit overdone here in thin illiquid summer trade on a Friday. So we do want to keep that in mind. But again, whatever is happening in the market, this was VantagePoint was at least 8 trading days ahead of this. We've got the actual buy signal in the dollar index. That was all the way back here, guys. You can see on August the 1st. So nice little 9 or 10 day move ahead of the markets. Now, what's interesting here is that VantagePoint also has forecasted gold lower all the way back in June the 14th of this year. We've had multiple retracements to the key VantagePoint pivot area, and every time we have failed. Now, of concern to me, respecting what I've just stated about the dollar, gold is not breaking down below the 1200 mark, 1195 mark. If this is a true breakout play again on the US dollar index, we need gold moving lower, and basically it's more or less stalled here. So we need it pushing below 1200 to fuel an additional rally in the dollar index. Now, as we look at oil remains locked, basically going back to our July 18th low. We're banging into that VantagePoint critical level, 67.41. Oil usually, based on the seasonality, will remain strong for at least a couple of more weeks, in my respectful opinion. Then we may see a slide, but you can see the RSI starting to recover. But this factor, oil plays a big factor on certain currency pairs like US CAD, Great Britain US. So we want to keep a very close eye on that. Now, with the equities going into next week, they have a huge effect on our Forex pairs, specifically, more specifically, I should say, Aussie US, New Zealand US, dollar yen, US Swiss franc. They're all tied in some way to the equities, guys. But if we look at this, you can see that, as I talked about last week, most of your pundits were saying the equities are going to make an all-time new high last week, for not just for the year, but an overall new high. And I was not in that camp, in my respectful opinion, because when we look at this in the broader scope of things over the last 6 to 9 months, we can see that the S&P 500, the equities in general, made a substantial move, which I would not disagree with, right up until January the 29th. And it simply has not been able to break past or put a new high in for the year. So before we worry about all-time new highs, we first have to put a new high in for the year, which we're not doing, and it would appear that we've turned lower. Now, in defense of that statement, I will say that the risk-off environment of what's going on with Turkey has definitely had an effect on this. The fundamental is an effect, but as to how long that effect will take place is left to be seen. I'll further point out that we've stopped directly at 28.26. We're closing 28.36, but you can see that we've come down and kissed the VantagePoint T-cross long, and that area is held. So there's still hope that we can push higher here, but it is going to be, again, headline related. Now, when we look at the Euro US going into next week's trade, we've had a big move. This range that I've been talking about for the last 3 months has finally broke down. The problem I have with this, guys, is it happened on a Friday, again in thin illiquid markets. The better play here, again from VantagePoint, well ahead of the market on Euro US. We discussed this in VantagePoint's live training room. And again, the breakdown or the actual sell signal started to form here on August the 1st, guys. That's an indisputable fact. We've had multiple retracements back to the T-cross long, and that led to an even bigger move 3 days before this actually happened. So when we look at going forward in our trading next week, if this range is truly broken, then support will become resistance and the market will not be able to get back up above 115. So my concern is that this is a bear trap. I'm not saying that it is. I'm simply putting it out there that it could be because of this big move, and more importantly, the direct intermarket correlation the euro has to gold. Gold has not broken down here, so we either have a potential long on gold, or gold is lagging behind the euro-US pair. We have to wait and see how this one plays out. But again, as long as we're holding below 114.83, 115.47, if we get back up to 116, guys, this is a bear trap and we are going higher. So keep in mind what I've said right now. We are getting somewhat oversold, 12.8 on the RSI, but I don't think we're done quite yet. Now, if Euro-US is also a true breakout to the downside, we would further have a breakout to the upside on US Swiss franc. When we don't, we've got an opportunity potentially to buy into this pair more. 99.35 is the critical level, the key vantage point T-cross long. But the indicators are very, very mixed here. I will say that. The neural index remains down. The predicted differences are dead flat, so we have to be cautious here, guys. Again, this does give some credibility to what I said about a potential bear trap on Euro-US, because if we have a bear trap on Euro-US, we have a bull trap on US Swiss franc. So be careful with this one, guys. Now, the British pound, once again, I will point out that VantagePoint has forecasted Great Britain US going, going lower considerably long. The main signal from VantagePoint actually came back on April the 19th, guys. That's how long this has been going on. We've had multiple retracements back to the key vantage point level, and we have failed every single time. So this move lower absolutely is fueled by Turkey, but it's also fueled by Brexit. But at the end of the day, guys, the most recent signal, as you can see, we had 4 days in a row where we were banging into this T-cross long, that key vantage point long-term pivot area at 131.55. 4 days in a row, and then bang, down we go. The predicted moving averages start to separate from one another, and next thing you know, we're moving lower. My concern with this particular pair, if you'll notice here, we are 3.9 on the VantagePoint predicted RSI. So that's not exactly suggesting we have a lot of room to the downside here. So I will point that out. And again, I think we're a little bit overdone here. And the dollar usually starts to weaken, around the middle of the month. So we could have some opportunity for a long coming here. You can see the medium-term predicted difference is crossing the long. So we'll monitor this, but on a month-over-month basis, this pair usually makes about a 120 pip move, extends its move lower, and then retraces back to where it began at the beginning of the month. That's the beauty of currency trading, guys. So we'll keep an eye on this, but our upside pivot areas here are between 128.23 and the 130.08 level. So keep an eye on those key levels. As we come into dollar yen, guys, we can see very clear visual support coming in right around 110.59. We bounced off of that area on Friday, but we're closing 110.81. So watch this support area. The VantagePoint indicators are saying we are going lower. So that suggests a further risk-off environment. Indirectly, that could mean that gold could recover, the equities could move lower, oil could move lower. So there's a lot of different trades that spin off of the dollar yen. With true advanced intermarket technical analysis, That's how we see this, guys, and it's very, very important. But I will again point out that as per the live training room that we were talking about this week, VantagePoint signal came in on basically August the 7th. It started showing that this pair was moving lower. We've had retracements back to those critical levels around 111.21, 111.35, and we have failed. We have failed basically every single day last week into this area. So when we look at Forex trading, that's the beauty of Forex trading, guys. The currencies move 1%, currency pairs move 1% of their value per day. So sitting there every day cherry picking off of this T-cross long is a pretty profitable trade, even if it only moves 40 or 50 pips a day off of that pivot area on a single contract, guys. That's $400 to $600 a day. Who here wants to make that? You can pretty much guarantee that my hand is raised right now, right? So knowing these critical levels is how we make money. So 111.35 is still the key area. But if things turn around and we go back to a risk-on environment, this particular pair will recover. Now, as we move into our three main commodity currencies that we should watch this week, now, what I'll point out is the Canadian unemployment numbers came out on Friday, and it looks amazing on the onslaught. When the numbers were first released, unemployment ticked down to 5.8. We had more jobs created at 54,000 versus the 18,000. But here's the bubble that I must burst here so everybody understands. And I will point out again that whatever was going on with this particular pair, VantagePoint was already forecasting that this pair was going higher back on August the 1st. The unemployment report that you saw that came out of Canada was a horrible report. The majority of the jobs that were created were public sector, not private sector. Wage growth decelerated substantially. None of these are good numbers for a rate hike. So the Bank of Canada, assuming that, let's say that they hired me at the Bank of Canada and they were saying, okay, are we raising rates in October? My answer is a big no. We are not raising rates. There was nothing in that unemployment report that was good. I'm sorry. That's just, and remember, I'm domiciled in Canada, so I know these numbers. And that, despite the headline, it was not a good number. And once again, based around these key pivot areas, this would have me buying US Canada, as I suggested in the live training room this past week. So we want to make sure we understand these things. So when you're looking at, different websites, news sites, sell US Canada on this fantastic labor report, there was no such, that labor report was quite horrible, actually. So keep that in mind. I think that the bulls here are going to literally grab the bull by the horn, and they're going to likely win this battle. So as long as we're holding above this identifiable support here around 129.50, US CAD is likely on its way back to 133. Now, with Aussie US and New Zealand US, guys, this is an equity trade. And again, you remember that big move down. I'll bring it back here so everybody can see it. This big bar down on the S&P 500 translates into a big bar down on Aussie US. So if you're an Aussie US trader and you're saying that I don't trade equities, I only trade currencies, I hate to break it to you Forex traders, guys, but you are trading equities, whether you like it or not. And you stock traders that say that you're not trading Forex, once again, bad news, guys. You are trading Forex. You just don't realize it. So these two are basically joined at the hip. And once again, VantagePoint gets out in front of this move by at least 2 days. So it was already warning that when basically if I come back and we look at that S&P, when it started to top out right here, I'm going to slide this up, that immediately translated into a short on Aussie US. So the savvy traders that understand direct intermarket correlations, and this is something that I'll be teaching at the Tampa seminar in September, how to really play off of these direct intermarket correlations, invaluable here, guys. And when we look at this for next week, our upside pivot areas come in at 73.86, 73.68, and 73.45 with a very bearish close of 72.96. We just, very much like what I said about the S&P 500, guys, it's not about being right or being wrong. It's about understanding that there could be a bear trap down here. So if the equities recover, Aussie US recovers. That's what you need to know. New Zealand US, guys, the same deal, but this one is far more pronounced. You can see August the 1st, again, we're seeing a pattern, and hopefully everybody is picking up on this pattern. That's why I'm showing it. The dollar strengthened across the board on the first week of the new month. Again, I've talked about this at length in the VantagePoint live training room. So if you really want to see some inside strategies on how to really take VantagePoint, you might want to come in and spend a little bit of time in the room with me, because again, or come down to, I would love to see everybody down in Tampa on September the 7th of this year. We've still got a few spots left, but some amazing strategies that I'm going to show you guys for all markets, not just Forex. So with that said, this is the Forex Weekly Outlook for the week of August the 13th, 2018.